You have to go to the to find the deals. There are a couple of giant truth bombs about the business of commercial real estate that buyers don't understand. If people don't have, it's probably not someone we can service well. They should. My business partner, Luke, and I each take one of these and write down 10 names, and they get the phone call before anybody else. Who gets the phone call? The guy who, first of all, the guy who's next, and right? Those are the three people who get the phone call.
What are some key questions that they could be asking?
Most of the brokers who are listing a lot of properties will have seen a lot of deals and seen a lot of people make money and go broke. The smart question when someone comes to a listing is,
Welcome to the Wealth Through Real Estate Show. Today, we're joined by Chris Davies. Chris has been brokering multifamily deals for years while building a portfolio of his own. He got started back in 2008, and since then, he's seen cycles, strategies, and the mistakes that investors make. Today, we'll dive into what it really takes for real estate investors to level up in the multifamily space. Chris, I want to welcome you to the show.
thanks very much for having me.
Now, Chris, what was, just for the listeners out there who don't really know much about you, could you tell us, what was your first exposure into real estate and what pulled you in enough to stay?
You know, it's funny. I don't know when it'll get released, but we're recording this while my kids just got off a spring break. My grandpa started buying real estate. Actually, his dad bought our first real estate in Alberta after the farm, right? So it's kind of always been there. I was 12 years old in 1994, and on spring break, mom and dad got me to do a spring parking lot clean of Wedgwood Gardens, which is right across from West Edmonton Mall. It took most of spring break. I made $2,000. It's the first time they ever gave me a paycheck. That was it. I was like, cool, this is a job I can do. It's a job I can get paid for. And I think I probably figured out back then, I was like, if you know stuff about it, like I did work experience at the second crap like that, but I figured out that if you get a project, like a job where you know what's going on, you're not a pain in the butt, you can just work independently, you make more money and have more opportunities. So that was definitely it. I mean, there are other times where you realize, oh, gee, grandpa owns that entire apartment building. Or mom and dad have bought all these other houses. You start to see that. But yeah, I was thinking about that the other day. I was like, this is the week. How many years ago? It was 30 years ago when I got my first real paycheck from real estate.
Wow. And how did it transition from there? So you got in, you got a job, you got some money, and you've seen your family members actively investing in real estate. How long did it take until it really clicked like, hey, this is really powerful. This is what I want to pursue and actually what I want to make a career out of and take further.
Yeah. Definitely different layers to that. I never wanted to do real estate professionally, right? Dad started, so I saw grandpa stuff and that kind of made sense. My dad joined RAIN, the Real Estate Investment Network, probably in 2004 or 5. And we managed for a lot of RAIN members. We were managing, when dad sold the company in 2007, we were doing 1,600 units and then another 1 million square feet of commercial. And dad bought, I don't know, a dozen properties, 15 properties, kind of right at the right time. And him and mom retired in 2005 or something. I had a summer job working in a lab doing research at the university. And then I was doing full cycle accounting for my family while they were gone for all of these owner statements and things. They went to France for 6 weeks. I wanted to do science and bioethics and things. And then I moved and followed my wife to Kelowna before we got engaged when she was going to school. And it's while I was there, I went to my first RAIN event in 2008 and was kind of there's a blog post out there somewhere called Real Estate is My Destiny, where I was like, I'm supposed to be a realtor. And then a funny thing happened. I worked for a tech company doing search engine optimization and web analytics and social media before it was cool, and was really sick of it and had actually looked into getting licensed. And I had a funny weekend experience where I'd done all this research, talked to my wife, made a plan. I was working remotely from Edmonton. It's 2009. And my parents were camping. And so I had said, I'm going to come down and visit you guys while you're camping. We got to talk. On the Friday, my VP called me, new VP called and said, "Hey, your performance review was fine, but you don't seem to like what you're doing." I was like, "No, I don't. We need to change it." And he said, "This is great. Let's talk about these other things. We'll connect with you on Monday." Went and saw my dad and mom and said, "I want to get my license and switch into real estate. And here's my plan. I'm going to get my license. It's going to take 3 months. I'm going to keep working the marketing thing and then I'll switch." And they said, "That's great. We'll support you. You can license with us if you want or go where you want, but do the course first." And then Monday at 10 o'clock, HR called and was like, "You're fired." Oh, well, I guess I don't have another option. And that was in that was in August, I want to say. And by October or November, I have my license, and that was 09. So the switch from like buying my first property in 08, right, as the market cratered, to getting fired and then licensed in 09. And it was like a year later that I sold my first apartment building. And then 2 years after that, Dad joined me for a handful of years. And ever since then, it's just like every year was more and more apartment buildings. And then in 2016, hard cut, no more residential at all, dropped to the MLS. And so that's almost 10 years ago now. We've been doing nothing but apartment buildings and development land and commercial investment.
Wow. What a story. So you've been exposed to this from the beginning, and talk about, burning the boats and going into it. I guess the boats were sort of burned for you.
Yeah. Well, and I've definitely done that a couple times. I mean, like the switch to doing nothing but commercial.
Yeah.
Getting rid of like switching firms so I can't even sell my own condos, right? I've moved twice since then. Hired a seller rep and a buyer rep both times. Did not do my own deals because I can't.
Now, given the time that you started, like what a time, firstly.
Yes.
Do you think that starting in like a tough cycle gave you an advantage when later when the market shifted again?
Yeah, that's a brilliant question. Definitely. Yeah, I spent my entire first year, 2 years, meeting with homeowners, and I've had really great coaches all along. That's a different thing we should talk about later. Like coaching is unbelievable.
Yeah.
The line, "It's not your fault that you bought a property during a global financial collapse," right? Just to get people emotionally to realize it's not their fault their property is worth less. And that, like that type of fast, hard learning has been important. I forget who it is who's some, Mark Cuban type talking head or Cardone or one of those guys says, every time I hire a new person, the next 10 times they buy coffee, I make them ask for a discount. First,
yes.
You'll be real surprised how often you get a discount.
Yes.
But just to realize people can say no and you don't die.
Yes.
Right? I mean,
the worst they could say is no.
Totally. Yeah. Like one of the other reasons I'm really glad I don't do multifamily is like when I sold residential in Edmonton, I think almost every single property I ever listed was commissioned based on some variation of 7% of the first 100,000 and 3% of the balance. I am not tied to that anymore. And, commissions, my current coaching organization says, if you give your clients the proposal and then tell them what the fee is, and they don't gasp most of the time, you're underpricing yourself. The pushback I get when I chat with other brokers, agents, realtors about that is huge because they're so terrified of the no.
Yes.
Right? It's why we both love our friend Arlen Dolan. When he meets with investors and your investor says, "Is there cash flow? Like how much cash flow is there?" He's like, "None. That's stupid."
None. Yeah.
Everybody else is just like, "Oh my God, they might say no." And Arlen's like, "Hallelujah. They said no. I can go watch a kid's hockey game." Like,
yes.
Long-winded answer to a smart question.
No, that's a great response. And you are absolutely right. And that is the superior approach. But most people just won't take that step to try it. Now, I'm sure most people that have listened to this point probably can't resonate. There's probably a handful of people that can resonate with growing up with that real estate exposure. So, but I do think there's a ton of value and lessons that you've learned throughout that time that I want to see during the limited time that we have, how much of that we can actually pull out for the listeners out there. Now, most people analyze deals in their spare time. You live in it full time. How does seeing the market every day shape the way you think about real estate differently to your clients or maybe newer investors?
Yeah, I mentioned Arlen. I feel like Arlen and I are really good friends and business partners because we think the same, and we've
Yeah,
seen like Arlen's one of those guys we started managing for in 2002 or 2003. Um, you know, a lot of people take all these courses and join all these honestly stupid groups today.
yeah,
Where before I answer your question about what it's like to see all these deals and how I look at real estate now, the stuff that I own and the things that I sell, um, when people are running around joining groups, there is Cody Sanchez is an amazing businesswoman
oh
who
yeah,
I follow on all sorts of social, and she had a great comment the other day. The difference between amateurs and pros, and I, without having too big of a head, think of myself as a pro. Amateurs glorify every single step. There is a
yes,
culture of busyness in real estate investing right now where, oh, I got it under contract. I have to do a Facebook post. And oh, I'm touring the building. I'll do a
yes,
Facebook post. And gee, I've got my
yes,
environmental.
yeah,
Pros are interested in executing with as little effort as possible. Just like, did you know you could buy a building and not post about it till you're done? Just be like, look, I bought
yeah,
a building. Less is more, in my opinion, right? I think there's a lot of human connection that's lacking. And that's why we all want to join these groups and go on a cruise and do all this networking and take all these courses. It's nice and all. They're not bad things, but people are trying to replace something that is actually just a different human need.
yeah,
That's a different thing. When I first when I oh, okay, 2008 I bought my first property. I'm living in a basement suite in Kelowna. Go to the rain thing, and I was like, I'm not going to do the I'm going to start from the beginning, like every other investor will. I talked to Grandpa, but and to Dad. Rain had a 2-page analyzer form, like basic cash flow analysis.
yes,
I went to the Edmonton MLS, ran about 100 properties I thought would work, and I did over 180 cash flow analysis things by hand. And my desk was a door I had put on 2 sawhorses. And I made piles. I was like, those are under an 8% yield. Those are 8 to 10s. Those are 10 pluses.
yes,
Like I went hardcore on the numbers. And the thing I've learned since, like with my family and watching people blow up in the Great Recession, a couple of them went to jail. Um, a bad investor can make good numbers turn bad, and a good investor can make
mm-hmm.
the reverse happen, right? So I can, hey, I'm a sales guy. I can make the numbers say whatever you want.
Yeah,
The reality is, like, especially if you're an investor or you're seeking capital from other people, or you're looking at properties, you have to understand what your skill set is, what your unique selling proposition is, where you could make that building perform better than anyone else.
yes,
Um, there are way too many examples right now. The worst version of this right now, there are Facebook groups and private WhatsApp groups selling brand new MLI Select government backed 6, 8, 10 plexes just based on the numbers. And it's probably better than buying a pre-sale condo in Toronto in some tower that you lined up for and got your wristband. But that's not real estate investing, dude.
no,
That is speculation. And if your neighbor drops his rent, you have the same cookie cutter doghouse as everyone else, and you're going to get screwed. And if CMHC changes its plan again, you're toast. So when I
yes,
look at a property, all real estate for me is dirt with boxes on it. Do you have the right dirt? Do you have the right box to accommodate the people in it? If you have an apartment building in an industrial area, you should probably put different box there, right?
mm-hmm.
So there are lots of ways to play with that. The numbers have to back it up. They always
Yeah,
do. But it's not about the numbers. It's almost never about the numbers. It's can you improve the numbers better, faster, more effectively than someone else and reduce the risks? I mean, we can go into why multifamily financing is its own thing. But at the end of the day, I don't care if you're buying a house or a sailboat or an apartment building or a self-storage facility or an industrial building. Equity will save you. When prices go down, your down payment will save you. Debt will not. Debt will kill you. Equity will save you. It's
yes.
just hard to eat equity. So you got to worry about the cash flow too.
So for people listening out there is firstly having a lot of self-awareness for what you bring to the table, what skills you possess. right? What
Mhm.
value you can add with your unique proposition. And then I love the fact that you also highlighted the reps that you did to get a better
Yeah.
understanding, because I think a lot of people undervalue how much inputs they need to actually understand us on a higher level. And I think they get a little bit too caught up in just not insignificant details, but stuff that's probably a little less important to have
Mhm.
your focus on. Now, for people out there, what would you recommend? Maybe they just getting into the multifamily space and they're really trying to shift their perspective so that they can understand this game a little better. You recommend they go and they run the numbers enough times, and then how do they get better in analyzing? Okay, this is a good piece of dirt, and it's in a good spot, and I do think I have these skill sets that I could bring to the table. How do I know if I'm still going down the right path? Numbers seem like they could make sense. Am I focusing a little bit more on the numbers, or are there other factors that I'm not really considering? I know that's a pretty loaded question there, but what are
No,
your thoughts on
totally.
that?
Yeah, there's a couple different ways that you can start to unpack that, right? When you're really, really new, there are some decent groups out there that whether it's paid or it's free, like don't do the $40,000 coaching thing. My God, you don't need. Can we put like one thing in a big shiny box with your editor? You don't need a coach. I don't sell coaching. I don't like,
Yeah.
dude. And here's Arlen and I both agree enormously on this. Your coach should make 95% of their money doing the thing you want to do.
Yes.
My coach is a woman from
Yes.
Chicago named Tammy. She's been selling single tenant triple net investments her whole career. And the money I pay her and the group is a pittance of what she makes in her job, right? Stop paying all these groups. It's bullshit. I've lost it. The quality has just gone down the tube. So what do you do? Yeah, right? They're all self-interested. They want to sell coaching. They want to sell brokerage services. I get it.
Yes.
Those are things that are worth learning. Multifamily and actually all commercial is different, right? When we
Yeah.
talk about going to conferences, other people go to whatever, Keyspire, Wealth Genius, M2, you name it, Rain. Um, it's easy to be a big fish in a small pond, and that feels good. I go
Yeah.
to conferences like the Western Canadian Apartment Conference, where even as a broker, I'm in the bottom quarter. I'll sit at a table next to a guy that owns 18,000 units. The last time I was at the Edmonton one, it was George Schussel from Procura, who's building downtown towers. That's the room I want to be in. I want to feel
Yes.
insecure. So if you're in any market in North America and you're trying to figure out where to learn, I'll tell you the big picture thing, and then I'll give you the tactical. Who do you talk to? There are commercial groups. Like every town has some manner of apartment owners group. In Edmonton,
Yes.
it's Arla. There's the Calgary Apartment Association. There's a Canadian Apartment Association. Join those groups. Go to their lunches. Meet the people during the day. Right? You're going to sit with property managers and siding and roofing guys and engineers and random. This is where you get with other owners.
Yeah.
We'll definitely come back to talk about lists and CRMs, but meet these people, collect their information like a vacuum, and follow up with them. BOMA, the Building Owner and Managers Association, NAOP, the National Office and Industrial Practitioners thing, right? If you're a woman, CREW, Commercial Real Estate Women, you're going to sit with brokers that transact tens of millions of dollars a year, or women who work at massive property management or in-house companies or start their own company. Like these are
Yes.
some of the most competent businesswomen I've ever met in my life, right? They're everywhere. If you're a broker, get your CCIM. Like these are the professional things. They're during the day. You can't have another job. Like right, this is the job, whether you're an investor or whatever. So that's what you do professionally, right? This is why I don't belong to any of the other groups right now. I go to them, I speak at them, I like the
Yeah.
people, but they're selling retail and I'm selling wholesale.
Yes.
Um, all right, so El Rey moves to Edmonton or Whitehorse, Yukon, or Celebration, Florida. How do you start buying apartment buildings? You got to find out where the listings are.
Hmm.
Apartments are completely unlike. There are a couple of giant truth bombs about the business of commercial real estate that buyers don't understand. So we'll have them. There's two. One's about commissions, and the other one is about commissions, but what it means for like who you serve. One's commissions for the agents, and one's commissions why buyers suck. Go to the new market and figure out who has the listings. This is
Yeah.
troubling because they're not on MLS, right? The best people you can find to tell you where to find listings are actually going to be more service providers, right? A mortgage broker, a commercial real estate lawyer. The mortgage brokers are usually going to have the most insight. Appraisers are probably number two. And they're going to say, if you go in and say, hey, I'm new to the market, I'd like to find some stuff. Chris said that you're going to know who's doing deals more than anyone else. You have to go to the listing broker to find the deals.
Yes.
There's no other way around it. I'll explain what that means with commissions in a minute. But then you get to talk to that person who's got the listings and also, right, the mortgage broker and the appraiser. Because the listing broker is going to send you a deal and you're like, well, okay, dear listing broker, Chris, can you show me a couple comps for this thing and help me understand it a little bit? Realize, much like my time to my property manager, I'm worth about 30 seconds in that day.
Yeah.
Be brief, have an agenda, don't get distracted. If it's a 3-minute phone call, then hang up in 3 minutes. Don't be a jerk.
Yeah.
And then the mortgage broker and the appraiser, most of them, if you're serious about executing, will take a little bit of time to walk you through the deal. Where do you think the values can be? Is this good? Is there a better price? What do you know about the vendor? Most of them will
Yes.
know stuff if you just ask the question, right? Now, how do you get into a market and get those people to play ball with you? Arlen, again, yeah, like Arlen said, his
That's the
first couple
question.
deals when he switched from singles to multis,
Yeah.
he did the mediocre deals just
Yeah.
to get in. Your first deal in baseball terms is always going to be a single because no one's going to take, like, I have these little yellow pads.
Yeah.
When we list a new property, my business partner Luke and I each take one of these and write down 10 names, which is why it's sitting here. And they get the phone call before anybody else. Who gets the phone call? The guy who
There's
closes,
it.
first of all, the guy who's
Yes.
easy, next, and the chick with all the cash, right? Those are the three people who get the phone call. The
Yeah.
question asker is number 34. So try, like, we just sold 10 units in Eastwood. That buyer, slick as can be, friendly,
Mm.
did it on time, no extensions, no renego, just slick. He's an A-class client right away. Like in our CRM, like we all have systems. I have
Uh-huh.
buyer quality classes, right? And it goes
Yes.
A, B, C, X. X is
Mm-hmm.
exponential. There are only 3 names on my X list, right? But that dude who bought that building, he's an A or a B now. I don't even know. But yeah, he should be an A because it was just so good. When you're really new, is it good to have a buyer's rep to protect you? Maybe. Maybe, but the really qualified people know that it's not profitable. Second truth bomb of real estate, it's
Yeah.
not profitable to do buyer rep for multifamily because you cannot get the listings.
Yes.
I'll let you talk for a minute, and then I want to unpack the mechanics of brokerage and what it means for buyers because
Yes. Yes. Please.
it's the deep end of the pool, man. There are sharks here.
You sort of you were answering my follow-up questions as we were going along. So, I love that. I think
Sorry.
we were on the same path there. No need to apologize. So yes, you firstly highlighted where people need to be, like what rooms they need to be in. And if you want to be leveling up, you need to be in rooms with people that are far ahead of you. Get out of your comfort zone, get out of feeling like the big fish, and so that you can start growing. So that's the first thing you highlighted. You spoke about CRMs, which we'll touch on, but essentially it's once you start creating those relationships, you need to build on those relationships. And that takes a little bit of strategy and being purposeful with that, right? And then secondly, or thirdly rather, would be how do you build yourself up? Where do you find the people? Where do you find the brokers? Where do you find those contacts? And then how do you build yourself up on their list? Now, for newer investors in the multifamily space, of course, it can be a little daunting and, you have questions, but the key things, like a lot of the takeaways there is you want to reduce as much friction as possible for those people that you're working with, so that when they see you call or when they see you reach out to them, they want to take your call. They're not like, oh, it's this person again. When they have a property that comes up, your name pops up. So you need to work your way up on that list. And you do that by making things as easy for them as possible, being as respectful for their time as possible, reduce the amount of friction that you bring to the table so that you have access to the bigger and better deals. That's the gist that I got from that conversation there. And you
100%.
sort of unpacked it really nicely. So, honestly, I don't want to interrupt your flow there. Let's keep it going.
Well, I mean, the number one thing, I mean, like when we call Luke after we've done a buyer intro, we're like, oh, that guy has no money.
Yeah.
If you're, and this goes two ways, right? If you don't have enough money to do multi yet, which for me, like in Edmonton right now, if people don't have 300-400 grand, it's probably not someone we can service well. They should honestly come back to you and just buy a bunch more singles. Like, like me, condo townhouses, I love them. If you're raising money from JV partners, like a syndication type of deal, get the money first. Like, I mean, Edmonton is a market that's moving real fast. You've got to raise the money first, put it in a trust account, or even if someone says, yeah, I'm in for 100 grand, get 10% of it in a lawyer's trust account. Because, sales is a massively underrated skill. Psychology is a huge part of that. Someone has to make the physical commitment of writing a check or clicking the e-transfer to be able to commit to you. If you want to make it really easy this is, again, there's a guy, if you want more free multifamily advice, there's a broker in Florida I love named Bo Beery. And he, for a long time, has said, like, if you're a buyer coming in here and we don't know you, I will ask for, and you should straight up provide a list of all the properties you've owned or transacted, copies of your bank statements showing me the cash is there, who all the material partners of the deal are. Do the overkill, but don't make me question whether you've got the cash to close. Show me a bank statement. And if you have to raise it, go raise it and then come back.
And then come. Yeah.
Like, if you don't have money, I mean, I like paychecks, not projects. I do this job because I like to get paid. So, like, I like lots of things about it, but that's the reality of the business, man.
That's the truth.
You got to be able to, like, and when you're meeting people who are doing this, like, even in those other groups, like, this goes back to Cody Sanchez's amateur versus pro thing. If someone is trying to be your coach or supporter or whatever and is showing all these little steps they do in their deals, they're either a small amateur trying to seem big, or they are big, but they know that people like seeing those little steps. And so they're just trying to use it as a marketing tool to get you to buy something.
Yeah.
When Corey Perry is the last dude on the ice at Oilers warm-up and he's practicing shots, he's not doing it so other people know. He's doing it so he can kill it. And he only cares about the goal on the other side. It's the only thing that keeps him in a job. Real estate is like that. No one cares how many practice shots you took. Did you put the puck in the net?
100%.
You gotta go.
100%. I like the way you highlighted the order there, because I think a lot of people getting into this, either they just get in the wrong advice or information, or just mixing the order of those steps up. And it's like you hear the age-old saying of, find a good deal and you'll find the partners. But as you've highlighted, it's one of the quickest ways to kill those relationships that actually give you access to the deals, right? So go raise the money, get the capital, have everything in order, have your proof so you could show people why they should be taking you seriously. Now, here's a little question for you. If I don't know if you have anything for this, but what about these investors who are listening on and they're like, well, shoot, Chris, I know I have access to, maybe it's a network of investors that have capital, but they really want to see the deal. They want to see me bring something worth anything before they actually tie their money up with me. What's some piece of advice that I can implement or do so that I can actually build things up the right way and not burn all these relationships by trying to find the deal, wasting important people's time just not to get anything?
It's part of the reason you're great at this podcast, all right? You have to ask great questions. You have to listen really hard. One of the things you said is before they tie up their money. Oh, you're not tying your money up. No, this is sales 101, right? You you're putting it in my lawyer's trust account. You're not even giving it to me. It's fully refundable. But
Yes.
we can't steal in slow motion. You can go to
Love
the
that.
appraisers, you can go to the other broker and say, show me past deals so I understand what a good deal looks like in your market. Oh, for sure. That's easy. My assistant will send you some stuff. Great. You got to go back to those partners and say, this is what it's going to look like, right?
Yes.
If I'm going to call you and say, I need money in X, now you should have some of your own money to do the basics here, like basic
100%.
deposits, basic legal costs. If you don't, you need to go get a job, make money, save money, jump through hoops,
Yeah.
start with small things. I don't believe in going from like go-karts to Formula One. But if someone says, I'm not willing to do this deal with you until I see the actual deal, I'm not even willing to put a refundable deposit at your lawyer's office, one of two things has happened. Either you've not brought the right information, or they are simply not going to say yes. So what? Next? Like, how does it go?
Yes.
SWSW? Some will, some won't, some will what? Someone's waiting, right?
Yes.
We both agree that someone saying no is totally fine.
Absolutely.
That's great. Keep them in your file. Come back to them with other info. They get a nurturing campaign, is what I would call it. But let's be like, okay, cool. Like the walkaway close is the best close in sales,
Yes.
right? If you would like to be like, if you're an investor, you are very much like me as a broker. If I'm trying to get your money for my investment, El Ray, and you give me that line, you know what, Chris, I'm not willing to put money out there till we find a deal. Okay, El Ray, if you're comfortable being on my B list that I already told you about, that's fine. The
Yeah.
people who get better deals, we've built some trust, they're able to move faster, and they're willing to take the small risk of putting money at my lawyers or your lawyers, don't care, put it in someone else's bank account. That's great. If you're comfortable on the B list, I'd love to keep you there and we can talk about it more next time. If you want to be on the A list, we've got to be able to move fast to get good deals. And if that's cool. And don't belabor the point, but just be like, if you're comfortable being on the B list, that's great.
That's actual verbiage that people can use and actually take. You make it their own,
100%.
but that's the truth of it, is what's more important to you at the end of the day? Is it how that money, when the money flows into the trust? Because we find a good deal, it's going to happen. Or is it getting a better deal? If we want to get a better deal and we want to get access to that, then there's an order in which things need to happen. Now, you highlighted something which is really key. But before I ask that, another thing you mentioned was the walkaway. And there's a book that comes to mind, Pitch Anything by Aaron Claff. I love that. It's frames.
It's on my list. I've not read it.
It's controlling frames in situations, and he literally pitches to investors. So for people listening out there, it's one of those like must reads. But it's controlling the frame of it, and being able to just walk away is a big one. But you mentioned asking the right questions, asking great questions. What are some things you recommend for investors looking to get into the multifamily space? What are some key questions that like they should keep in their arsenal that they should use? Because keep in mind, one thing you mentioned is, hey, be respectful of time. You don't want to be asking a bunch of questions. You don't want to be wasting the broker's time either. But what are some key questions that they could be asking that would serve them well, keeping in their arsenal?
That's the one I didn't see coming, because most people don't ask that question in the smart way, right? A lot of people come to us here right now with preconceived ideas of what a deal is going to look like, especially if they've come from a lot of the course club things where, I took the lease option course and I took the multi course. Most of the brokers who are listing a lot of properties will have seen a lot of deals and seen a lot of people make money and go broke. The smart question when someone comes to a listing is, what do you think the best strategy for this building is? Like for the value add or for creating the deal, what do you think the best financing idea here is?
Yes.
If you're not already clear about what the options are, and if you think you're clear of what the options are, like the most experienced people I work with will say, Chris, I'm planning to do this type of value add and this type of financing strategy. What am I not seeing? But if you know you're new, right? Sometimes I'll say, like, we just listed a little 9-suiter and I say in the ad, it's got training wheels on it. Buy it, finance it, run it. That's it.
Yes.
You're not going to do tricks on a training wheels bike, right? Another building, all screwed up, lots of vacancy. Don't do long-term financing, it's a value add. Different mortgage, different renos, big refinance. I've been doing this a long time. When people are like, no, Chris, I know what I'm doing. I was like, that sounds great. I like my paycheck. I think you'd be more successful if you asked a couple of questions. But I have a post-it note at home. I don't have it here, which literally says, I'm curious.
Mm.
If you just start every conversation by saying, I'm curious if there's something I'm not seeing. I'm curious how you would finance this or how you would renovate this or you
Yes.
would change the tenant demographic. I'm curious if you think that this infrastructure, like really, it all comes like as much as it's all dirt with boxes on it.
Yes.
Everything that goes into a box depends on jobs and the economy. That's it. Whether it's self-storage or a warehouse or a manufacturing facility or an apartment building or an office tower. How do you think that, you know, today is tariffs day.
Yes.
How are tariffs going to impact my commercial real
Impact.
estate?
Yeah.
Right. And when someone says it, never just say like, cool, ask one follow-up question. You want to make your wife, partner, significant other happy whenever they tell you about their day? Ask a follow-up question.
Yeah. Oh,
Everybody gets so
100%.
happy when you ask questions of them.
I love that. I
That's the
love
big
that.
one, right? What are you seeing that I'm not seeing? And then take their advice and unpack it.
That is gold. And again, stay curious is a nice one. Stay curious,
Yeah.
ask the follow-up questions, you know, again, ask them what are they seeing that I'm not seeing. And no, okay, I love that. Now, one thing you mentioned is like jobs, and I'm curious if you have any recommendations for like what the best ways an investor can sort of stay informed, follow the right signals, especially if they want to grow in this space long term. I mean, in this day and age, there's a lot of noise and information out there. What are some
Mm-hmm.
key things that they should be following and keeping their finger on the pulse with?
Yeah, there's a really old RAIN resource called the Property Gold Mine Scorecard. And these are things like in Alberta, we have a provincial economic dashboard that does a lot of regional breakdowns. I look at it a lot. I look at
Yeah.
CMHC's data a lot. Are people moving to the area? Is there a positive business climate in the area? Are taxes going up? Are wages going up? Is average weekly income going up or down?
Yes.
If things are flat or up, you can work with it. If things are going down, you better understand if it's a temporary trend or a long-term trend.
Mhm.
Especially like here we are in the spring of 2025. There are lots of things going lots of different directions. Like you got Ontario condos falling off a cliff. Like there are lots of things going on. I believe in buy the dip, but you got to figure out
Yes.
how close to the bottom you are or what your staying power is. I mean, ironically, I don't have a copy here, all right. I wrote a book called Apartment Buildings That Outperform. If people email me, I'll send you my own link or you can buy it on Amazon. The whole book is about staying power, right?
Yes.
I bought a building and I was not close to the bottom and I did not have enough staying power and got my ass kicked. And I'm just glad I had amazing partners on it. Being ready for that uncertainty is great. We ignored some of the variables and we did not ask
Yeah.
the question what is this? Like a really high pest control bill usually means they've dealt with the problem.
Yes.
But when I failed to connect that to the occupancy, I did not see the bigger problem and my building went to half vacant. That was
Hmm.
not fun. There's a million stories about management and my own stuff. That's a whole different podcast, dude. But
Yeah.
yeah, like figuring out what that gap is great. So you like when you can look at a place like Alberta, like most places in Alberta right now, you could buy a rock,
Yeah.
right? We are like in a fully formed part of the cycle, recovery, growth, contraction, recession. We're in the top half of that cycle. Everything's firing on all cylinders. How long will it
Yeah.
go? I don't know. But we are still seeing economic growth in
Yes.
migration. Weekly earnings are going up, taxes generally going down, very positive business climate.
Yes.
If Pierre Poilievre becomes prime minister and enacts his proposed capital gains cut, I think it would be huge for
Oh,
all the
yeah.
right reasons, aside from I make money at it. And I'm hoping it's another one of the things that Mr. Carney decides to take out of the conservative playbook because it's smart policy. If they can
It
make
is.
it close to revenue neutral, I think it would be massive for getting folks to reinvest in the type of real estate and infrastructure and businesses that Canada needs to be the type of place we're going to want to live for the next 50 years.
Yeah. Oh, yeah. No, that's going to be huge. Now, I want to sort of summarize a lot of what you said there is, um, firstly, for everyone out there listening, is if you find this to be a little overwhelming, I still think it's a good idea for you to be doing a lot of this understanding and research on your own. Like Arlen says, never drink someone's Kool-Aid, never drink just that person's Kool-Aid. But ultimately, for you guys listening out there, Chris puts a ton of great information out. Like he records just quickly on the go some reels, like summarizing a lot of what's going on. He also does those Zoom calls that are like live and packed with information. So that will help you keep your finger on the pulse. But I wanna make sure I got this correctly there from you, Chris. Is understanding it on like a macro level, but like you said, there's a lot of moving parts and things moving in different directions all over the place. So you also then want to dial it deep into perhaps the geographic spots that you looking to invest in and keeping your finger on those hyper local spots as well, so that you understand that. And then, you mentioned a few other things like mistakes that you've made along the way with regards to, some of your investments, which again, are separate podcasts. So we won't go down that rabbit hole. But, because I feel there's a lot of people out there who don't know what information to follow. When should I be scared? When should I be greedy kind of thing, But it's also just having a little bit of an understanding, like on the political side, and what that does to how the general population reacts in general, I think, and knowing where you are in the cycle. But there's a lot there. There's a lot there. So for people listening who are like, wow, how do I keep my finger on the pulse on all of this and run deals and get joint venture partners? Well, you follow smart people like Chris who help put this into context for you guys. So I'm going to make sure I leave all that info below in the show notes below. So after the show, you guys can go follow Chris because he puts a ton of good content out there. Okay, well, we've really, really, really unpacked a ton there, Chris. We went from putting it in order for people looking to get into multifamily, like doing it the right way, going to not just these low level small events, but you like highlighted a list. So people should actually go back, write that down, highlighted a list of places where they should be, rooms they need to be in, how to build, relationships with people who have the deals. And you highlighted a very, very clear-cut distinction between how multifamily and residential space differ. In the residential space, you want to have a buyer representing you on the buying side. In the multifamily space, it again adds a little more friction to the whole transaction. You want to get in contact with the people who have the deals, right? You want to foster those relationships. You want to be as valuable as possible to them. And what that means is no headaches, no frictions, ask the right questions and do your due diligence. Come prepared, show them why they need to listen to you, and build your way up their list there. Now, we mentioned the CRM thing. So if you quickly want to touch on what's a good way for people to build those relationships, stay in touch. I know you mentioned, you potentially rank people in your CRM and they could do the same. But what's a good way for them to stay in touch, add value, build a relationship, not be too annoying or too bothersome, but also not sort of take too long and sort of just lose touch of those relationships? What's a good cadence and how do people approach this to really foster those relationships?
Yeah, I think your question about cadence speaks to your own level of experience with these types of systems. And there are so many wonderful resources. There is a broker in New York City named Bob Knackel who sold almost 3,000 full buildings himself. He is the GOAT. And we spent some time together in Texas and some other places. It's about bringing value. So we'll actually go like super simple. You could do this in Excel, but there are a million free CRMs out there that you can use to keep track of people. And, you like me have cards sitting from events.
Yes.
You need to keep track. These guys do electrical stuff. These people do development. This guy is a potential investor. Pick categories and put them in a category. And I don't care what your cadence is. Decide on what it is. If someone's a potential investor, so I have lots of resources. I'll give you if you're willing to go whole hog, or if you're a real estate professional. Like me, a full client load is 400 people. The Class A's you will talk to once a month. You can have 100 of them. So that's 100 people a month. 25 a week, 5 people a day. That's it. You're going to connect with them once a month, tick, 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 tick. The other 300 once a quarter. That's the other. So, right, 5 people a day from each category, 10 a day. Like, it's just math. Oh, and what do you do when your list gets full? Well, an A who's not actively taking action gets demoted to a B. Do
Yes.
those all have to be phone calls? No, but the phone call is the best way to do it if you're not actually sitting in person, right? If it's an appraiser, reach out. Now, what do? Do you call and say, would you like to invest in my project today? No. If
Yeah.
El Rey owns an apartment building, I don't know what my message of the month is right now because it's a new month and we're writing our calendar. But what is almost certainly going to be my next phone call is, and this is where Bob Knackle is the GOAT, call and offer them a piece of value,
Yeah.
right? If you're like in the middle of analyzing your deals, be like, hey, we were talking about a building. This one just transacted. It's exactly like I would like to buy with you. Have a look at the
Yes.
brochure and then shut your mouth and let them ask a question, right? I have a friend who sells insurance. And I said, don't email everybody asking you to quote their thing. Write a guide. Use ChatGPT to a one-page guide of these are all the things your policy needs for you to get a better rate. And
Yes.
send them something of value. Don't ask them for something, give them something, right? The only other
Yes.
fun thing that's reverse psychology, do it backwards. I'll call an apartment owner down the street who won't sell his shit with me, but to build the relationship, I'll call him and say, I really need a good plumber. Can you help me?
Mm.
And it creates this beautiful reverse psychology thing where now they think, oh, I'm of value to Chris.
Yes.
And they're extra happy to get my next call. But whatever it is, everybody you get, I have almost 8,000 people in my CRM, and they are all categorized: realtors, like mortgage brokers, lawyers, whatever. And
Yeah.
each of those categories can have its own cadence, whether it's phone calls, physical mail is amazing. Like pick a marketing calendar and stick to it.
Yes.
I don't
Yeah.
care if they're annoying. You're allowed to be annoying because they can say no and you don't die. You just say, okay, cool. I'd love to take you off the list. Delete. Next.
Yes. There's a ton of value in that, and it's a big investment to really put the work in, categorize them properly. Depending on the CRM you're using, it's tags or whatever that is,
Yeah.
and putting the time in to not just have a list but have a well-oiled machine makes the difference
Yes.
for you, so that you
The
purposeful
actionable
with your
data.
phone calls. And yeah, yeah, and I love the fact that you broke it down into numbers, because that's what it is at the end of the day. And
Yeah.
it becomes a lot less overwhelming if you have the system in place and I need to do X amount of reach outs per day to keep this going, to keep building those relationships. And it compounds over time.
Mm-hmm.
Keep planting those seeds, keep watering those seeds, and those relationships grow. So
Yeah.
no, I love you gave practical steps for people, not just fluff. Practical steps for people to take, put this in place. Find a CRM that the best CRM out there is firstly the CRM you're going to use. So find a
Yes.
CRM that works for you and get going on being purposeful about building those relationships, because ultimately that's going to build everything else around you. So Chris, I love that. I wish we could keep this going. I know we're getting close on time here, but for people listening out there who want your take on it, where do you think, if you had to just open that drawer, pull out your crystal ball, where do you think the multifamily market is headed over the next few years? Now, we know you're located within Edmonton. I mean, you have your finger on the pulse in general, but just looking, if you want to go hyper local, we can. Looking at the multifamily market, what do you predict? Where's it headed over the next few years?
Yeah. Yeah. I mean, we work primarily like across Alberta. We dabble in other provinces a tiny bit. I think that Alberta is just going to go, like in terms of multi, to the average, right?
Mm.
And you think about that with residential. We're just going to go to the average. The Canadian
Yeah.
average price is, I don't know, 30% higher than Edmonton's. I don't know the single family stats anymore, right? But up is a general question because we're just going to get to the average. There are some exceptions there, which is that Calgary's multifamily stuff, especially, like they have a smaller universe than we do.
Yeah.
And when you're talking about institutional money, someone from New York or Florida or, somewhere in Europe is going to start with the cities they know: Toronto, Vancouver, Montreal. And then they're like, well, Calgary, is that close to mountains? Right? It makes no sense, but they go for it. We're already seeing like the sub-institutional money flow here in a big way. So
Yeah.
you definitely see those different layers happening. Not every project or every market's going to be the same, but the economic engine is where it all starts. GDP growth, jobs, higher wages, more renters, higher rents. They move out, they buy houses. This is the magic curve. Um, you know, I had a conversation with my team this morning that was just like, you know, we're expanding the team regardless. And if Poilievre's idea becomes law about capital gains and a Canadian 1031 rollover, I was like, we need to hire
1031,
two
yeah.
more people. And this is what that role looks like and how we integrate them. Like we're
Yeah.
already into a potential, a brief conversation about what the tactics could look like to grow our business. So
Mm.
I'm pretty bullish regardless of what else happens in the world.
I fully agree with you. And I think a lot of people who are a bit concerned, I think they just need to get a better understanding on the macroeconomics of it all,
Mm-hmm.
local to where they're at. And that will give you the conviction if you really study that.
Well, and here's the tactical thing. If this happens, people say, "Oh, everything's finished. The world's going to explode." Multifamily has this 5% down program called MLI Select.
Yeah.
There's an older program called MLI Standard, and they've slowed them getting closer together.
Yeah.
MLI can disappear, and people will not die. Okay, settle
Yes.
down. The fact that you can't put 5% down on an apartment building, like for the love of all that's holy, like
Yeah.
settle down, everybody. I mean, honestly, my smart clients, the guys I know have staying power and have made lots of money in the past and are making smart decisions. They might be using MLI Select. A lot of them are using Standard. They're putting 15% down. They don't want the risk that comes with being that highly leveraged, and there's no cash flow. At 15% down, you'll make a couple bucks, but you'll be a hell of a lot safer if, I mean, there is a big party, and Alberta is a cyclical place, and what happens after the party? There's a hangover. It's not now,
Yes.
but a sailor prepares before the storm comes.
100%. And this coming from a guy who's been through all of this, who's
Mm-hmm.
seen the different parts of the cycle. So yes, I think when the music stops and the lights go on, like they say, some people will get caught with their pants down. I don't know if that's how
It's
the
a
saying goes.
parting thought, man, but it might be a parting thought. Like when things go sideways, talk to people who know. The day asset-backed commercial
Yeah.
paper collapsed and one of my mortgage approvals went sideways, I called my grandpa. I was like, Grandpa, what the
Yeah.
hell do you do in a recession?
Yeah.
And like he's been dead for a long time now, but I remember that conversation very clearly because he went into the 80s recessions with 17 apartment buildings and came out with 3. And that was huge. So I was when my one mortgage approval went sideways for a one townhouse, I was so glad I could call Grandpa. And I still have a bunch of gray-haired guys who I call for advice all the time.
I love that. I love that.
Yeah.
And that just goes back to the practical steps we spoke about on how to get those people, build those relationships so you
Mm-hmm.
have people that you can call to ask for advice. And
Yes.
those should be the people you're listening to, people who have been through all of this and they know what it looks like in all the different phases of the cycle.
Mm-hmm.
So I love that you mentioned that because yes, 5% down, the whole MLI select thing's been a trend, but yeah, you need to protect yourself, and like you mentioned multiple times throughout this, is have the staying power. Because if you have the staying power, you can see it through, right?
Definitely.
Chris, I want to thank you. This is a ton of information. I know there's so much more we could unpack. Really, we've kind of scratched the surface, but we have given practical steps for people who are looking to get started in multifamily, or maybe people who are in the multifamily space, but they really want to level up so they can be one of those 10 names you add to that list when a deal comes up. There's practical steps for everyone that they can take to implement that. It's not fluff. If you take this down, go through the episode and you actually write down steps for you to put into place, there's enough for you to work with here. But honestly, guys, the party doesn't stop you. I'm going to leave Chris's information below. Like, I'm being real with you. I watch the videos he puts out. I watch the content he puts out. He takes stuff and concepts that some people it might be a little bit tough for you to grasp and understand, and he puts it into an easy way to understand. He condenses it, makes it easy to grasp. So be sure to check it out. Chris, I want to thank you so, so much for coming on today and sharing with everyone. This has been real fun.
It's been a killer, man. Yeah, we have to do lunch again soon.
Yes, we have to, man. And we have to have you on again, yeah, and maybe we'll dive into another
Yeah.
rabbit hole sometime. But you, yeah, there was a lot more I know we could have unpacked. Just for the sake of time, we had to keep it brief. But thank you. This has really, really been fun.
I love it. Thanks, man.
To our listeners out there, if you're looking for more valuable insights, be sure to subscribe. Share this with someone who can benefit. And as always, keep investing smartly. Thank you for tuning in to the Wealth Through Real Estate Show. If you want to learn how to build effective systems that scale your real estate portfolio, you don't want to miss my episode with Zach. This is your host, Ray Noble, signing off.